Hello traders, the title of the video is Accurate Elliott Wave Trader Does Not Get Carried Away with His Elliott Wave Forecast. Alright, ladies and gentlemen, we are now about to look at the S&P 500. We have analyzed the S&P 500, we have forecast the S&P 500. But the question is, should we get carried away with our Elliott Wave forecast? Should we become a bit complacent after the Elliott Wave forecast? Or should we assume that our forecast is the only scenario that can happen? Accurate Elliott Wave trader does not get carried away with his Elliott Wave forecast. So previously we were counting waves, and we say that we see all this move here. Trending first was the first wave of a higher degree, and then we see 1, 2, 3. We call that the second wave, and we were telling trader we were in the third wave. You see the 3 there. My right is still on the chart. And that's a third wave of a higher degree, has been subdivided into 3 mana waves. First mana wave, second mana wave, third mana wave, fourth mana wave, and the 5th mana wave of the third wave of a higher degree. Alright, so we count wave on one time frame. That wave count on that time frame is is revealing to us the mana waves of another higher degree. Alright? So as we were calling this a third wave, that third wave is also revealing to us the internal wave of a higher degree. As you can see, because we were calling this first wave, second mana wave, third mana wave, fourth mana wave, fifth mana wave. Alright, somebody for instance that was on the weekly chart or daily chart maybe say, alright, the market is now in the 5th wave. But that 5th wave that person is seeing on the lower time frame is just forming the third wave of a higher degree. Now we say to trader, there is a high chance that we may see a pullback. You see my line on the chart, retesting what? The pitchfork tool. You may say to me, George, I'm a new trader. What is a pitchfork tool? And I'll say to you, go to www.dayprotrader.com, click on the web page that we title Andrew's Pitchfork tool. So the price almost near the top of the pitchfork tool. You can see here it crashed last time when the Federal Reserve started putting up interest rates at 2.5. All right, so almost retesting it. All right, will the 4th wave end here, or will it come down more? That is the question. We should not get carried away. All right, we should not get carried away. So in order to avoid being carried away or becoming more complacent, all right, we want to do what? Flow with the price action. As I've said 100 times, one of the Elliott Wave analysis mistakes that traders are making is to assume that the wave count that they have done, is what the price will do. You may think that your wave count is accurate, is correct, but the price may print something completely different. What are you going to do about that? All you have to do is to flow with the price and not get carried away. Many times, sometimes traders will purchase Elliott Wave forecasts, and they will forecast the Elliott Wave for them. But many traders do not know how to use even the Elliott Wave forecast that they have purchased. It's a guide, it's an expectation. One should not assume that because an Elliott Wave guru has forecast the price, that is definitely what's going to happen. That will be completely naive, all right? It's completely naive. So my approach and my recommendation to traders, which I've been saying for years, is that, you count a wave or you purchase from the top Elliott Wave practitioner. Don't just go and buy or sell anyhow, anywhere. So it makes sense for traders who understand multiple time frame trading methods. After you forecast the price, now you concentrate on the price action and you are looking for a sell signal. And there was one here. You see that? So we count our way, we were here, we were saying probability that the price may start pulling back here. How do we handle that? There was one simple signal here. Didn't I say before at the Joe Trio channel that when we see a double top and MACD crosses below its signal line, it's a high probability trading setup. So try from a double top, not equal top. This one will be higher, but pull back below the prior high. It's a double top, a bit hidden. Look what MACD, the standard MACD, it crosses below its signal line. A double top, and the standard MACD crosses below its signal line is a high probability trading setup. But if you apply this strategy, try to make your MACD a little bit thick. You see how I make it very thick? You don't want to make your MACD very thin. So it will take time before you see that it truly crosses it. All right? So that's the first indicator. So I have my expectation. Now I'm trying to see if there will be a bearish setup, whether there will be a bearish signal to sell before I will sell. I will not just sell like in the old days, just because I'm expecting a fourth wave. The third wave can be extended. Here we have another indication that one should give priority to sell signal. All right. Have I said also to traders at the Joe Trio channel that when MACD crosses below its signal line and we see a rally into a resistance zone, that is also a high probability bearish signal. We can see MACD was below its signal line, and you see in the month of November the price rally up to retest the prior resistance level. Can you see this resistance here? Retest it right there, and from there the following month, which is the month of December, price went a little bit, just a little bit. Can you see that? A little bit just there, and it showed it down. One should not get carried away with the area wave forecast, whether it's an accurate area wave forecast or one has purchased it from a viable source. At the end of the day, if one is expecting a pullback or a bearish price action, one will look for bearish trading setup. The setup, as I said to traders before, is the origin of the trade. The forecast is an expectation. All right? So the forecast plus the setup, and then we implement a different time frame trading method to trade it. Was it beautiful here? A double top, MACD crosses below signal line is telling me that Joe, the expectation is about to be confirmed. I don't want to get carried away with that. So I'm saying, all right, that's a bearish setup. Now implement a different time frame trading method. Now I'm expecting a fourth wave. I'm expecting a pullback. Yeah, the price rally up after a pullback. This is what people do. They sell it down, a rally up into a resistance level. Again, it's telling me that, George, there is a high chance it will go down again. We implement a different time frame trading method to sell it down. So in order to become a better area wave trader or somebody who is using the area wave forecast accurately, one should learn a little bit about the market, the multiple time frame trading method, talking about market timing. Sometimes in the financial market, there's something that is annoying me, but there's nothing I can do about it. You will notice that sometimes you'll see a very powerful hedge fund or market participant. They will outsource their area wave forecast, so they will contact somebody who knows about area wave forecast, and the person will forecast the market for them. So the person may say, for instance, that we are likely to see a forecast. So those people will go around and they will just start selling. Well, they just sell it because they don't know about market timing. They just sell. What they are trying to do, they are forcing it. They are forcing it. They are pushing it. They are trying to distort the market. That's what they are doing. Because if there is no bearish trading setup, no bearish trading signal, one should not sell. If there is no bullish setup, no bullish signal, one should not buy. Should we give a license for people? Should we put a requirement that before anybody intervene in the financial market, especially those who have a strong firing power, should they have a license before they come into the market? Because if you do not have a license to trade like a pro, and you have a lot of money at your disposal, you create all kind of a mess in the financial market. All right. So sometimes area we traded or hedge fund or big financial institution or individual financial traders will get carried away with the forecast and they will start doing all kind of things. And sometimes they get away with it. They will create a distortion. Though the price is not supposed to go down, they will force it down. And then somebody else that is counting where will be wondering where this is coming from. But it's a distortion. It's a distortion. Somebody forces, somebody pushes it too far. All right? Somebody twists it. They shouldn't be doing that. But here we are. All we do after the area wave forecast, so we do what we call, what I said to trader before. How do we start? A preliminary wave count. That's your 1, 2, 3. You just count the wave as you see like a chart. And then you do the area wave validation. After the validation, you wait for the confirmation. Yes or no? The confirmation is from the price. Yes or no? That's the price confirming your expectation. Now, what do? You use different temperature method to time the market. Market timing will help the market to be more efficient, so everybody get paid, everybody is happy. A financial market that is distorted is not good for anybody at all. And here we can see that the professionals spotted it, like myself, and I'm not the only one selling. As you can see, people are selling here. I was reading an article today when people were criticizing, I was reading something about that the President of the United States may sack, all right, the chairman of the U.S. Federal Reserve. Now, I don't know whether they will do that or not. That would be completely wrong, because the decision that the Federal Reserve has made, it did not distort the market. The market is due for a pullback. So, President say, Joe, what are you calling market? The S&P 500 is the market. The market is due for a pullback. Can you believe it? And the most influential market participant, which is the Federal Reserve, did the right thing by putting up interest rate. I was day trading that day when the price crashed down. Now people saying that, oh, the price was going up for some time. Why now the Federal Reserve is putting up interest rate and the market is going down? The price does not go up forever. The market has a cycle, mini cycle, right? Bigger cycle, and this is normal. And the decision of the Federal Reserve is correct at this point in time. The market is due for pullback. In fact, what they should do, when there is a time to put up another interest rate, they should do so we may have another fourth wave. And after the fourth wave, yes, the S&P 500 will go up again. So that's why I say to traders, in the long term, so if you are day trading, you are taking into consideration the short-term trends, yes or no? If you are swing trading, you are playing with the short-term and the medium-term, yes or no, all right? The position trader, the investors, think of long-term. So I was also reading one article when Goldman Sachs was saying to people that the market will continue to go up. So the question, you read something like this, then people say, Goldman Sachs says that the market will go up. Yes, the market will go up. But in which term? Is it short term? Is it medium term? Is it long term? It's in the long term. So Goldman Sachs with deep pocket can afford to buy stock even if they are going down if they want to. So in the long term, all right, the S&P 500 will go up one more time. But in the medium term, the S&P 500 must correct itself. If it does not correct itself, if we don't see that fourth wave, well, we should have it at one point. If it doesn't happen today, it may happen tomorrow or the day after tomorrow or a few months later. This is important for the market. Why? Because if the stock goes down, they become cheap. So companies that are creating more value for their shareholders, the stock goes down. Investors are not stupid. They will buy those stocks for long term. And again, it creates environment where the stock that were very, very overbought or very, very expensive become cheap. And people buy. In 2007, 2008, look at that. Look at this. This is this session here. All right? This session here. All right? The market was going down. People will say, oh, the market was going down, blah, 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 blah. It's the second wave of a higher degree. This session here, that's what people were talking about. There were curves in the bearish trading, but the same people that were saying, oh, the market was going down, they came and buy here to participate in the third wave. So when the price was going down, everybody was happy during the third wave. Now we are due for another correction, a fourth wave. So in fact, somebody who is the Federal Reserve should understand the Elliott wave. It looks to me that the Federal Reserve is using the Elliott wave carefully. Can you see that on this chart? You see, in 2009, they started quantitative easing, which means they were printing the dollar, so there were a lot of money floating around. People can borrow money very cheap, and with that excess of money, they don't know where to put it. They put it in the stock market, and the stock market was going up. From 2012 or whatever, 2014, they start talking about, all right, we're going to stop now our quantitative easing. But they did not start putting our interest rate. People were paying attention to that. But the market, the price did not change. It did just continue to go that the market understand that. The Wall Street understand that. The market should go. They say 1, 2, 3, 4, 5. Now the Federal Reserve start putting our interest rate at the right time again. As they did here, they were devaluing the dollar at the right time. At the end of the second wave, price went up. Now we are at the top of the third wave. They are putting our interest rate. Isn't it good? I would prefer the Federal Reserve that is making decisions that are not, messing up the financial market. So it will be wrong if they sack the current, chairman of the Federal Reserve. I don't think they will do that. Okay, that will be completely wrong because it's the right time to put up interest rate to create that fourth wave. And when that fourth wave is completed, so we are saying that the fourth wave, where the fourth wave will end, at the first and nearest support level, there is one here, that's the top of that level. Will it reach there? Maybe. Well, you see, we don't want to get carried away. We don't want to assimilate it. You may come back next month and the price start going up on the edge of this trend line. You can see that trend line, the blue trend line that I draw here is now on the edge of it. We have another orange. You see another orange pitchfork too. We talked about this before. We are also on the edge of it. The price can turn around here, say to me, George, that's the end of your fourth wave of a higher degree, or blah, 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 and the price start going right. They say, oh, George, your forecast is wrong. No, the forecast is not wrong. The price is always right, and those who are forecasting the market using the Elliott wave principle should not get carried away and just flow with the price. If you are wrong, put your hands up. If you are right, just smile, even laugh. You see now? So here we are at the support level, on the edge of that orange pitchfork tool. Well, from the end of the second Mano wave of that third wave higher degree, we connect with the top of the third Mano wave of that third wave higher degree, and also the fourth Mano wave of the third wave higher degree. We draw that orange pitchfork tool right chart. We are now on the edge of it. There's another trailer here that I draw roughly here. We are also on the edge of it. But it will be better that that fourth wave at least reaches the top of the brown pitchfork tool that I have drawn from the start of the first wave. Okay, you see that? Okay, it can even continue to go even down to the median line of that pitchfork tool, but that will be a very deep fourth wave. So because generally in normal conditions, the fourth wave should not be too deep, but there are still situations where the market becomes very, very bearish, or something lead to something else. We may have a very deep fourth wave. So watch out for the top. Now we are at that support level on the edge here. Watch out for the top of that brown pitchfork tool, and do not forget to put another median line for the top of for the upper half of the pitchfork tool. So this blue line, which is the median line of the upper half of my bigger pitchfork tool, is there also. All right. So this is about accurate Elliott wave trader does not get carried away with his Elliott wave forecast. So all in all, you forecast it. Your forecast is accurate. Wait for confirmation. Very, very important. So we do preliminary wave call, Elliott wave validation, going to different time frame, combine the lower degree to the higher degree. Now wait for confirmation. Confirmation is in place. Look for the trading setup, and then implement a top-down trading method without assuming anything. So now, like I told you now, you see the setup on the monthly chart. Somebody that is using a multiple time frame trading method will say monthly chart, daily chart, hourly time frame. Somebody that see the setup on the weekly chart will say weekly chart, 4 hour time frame, 15-minute time frame, and so on and so on. So I'll be talking to you now almost 20 minutes. I think that's enough for me now. I hope you will find this video also useful, all right, and begin to improve your area with trading attitude. You don't want to get carried away. You don't want to assume anything. Even if you think that, George, you have been right before, you will always be right. You don't want that, all right? Don't take my word for it. Compare your wavecom with my own wavecom and look for trading setup at the end of the day. Combine your area wave forecast with the trading setup and then use a different time frame trading method to trade it like a pro. So this will conclude our discussion today about an accurate area wave trader does not get carried away with his area wave forecast. In the next tutorial, I will be talking about what to do when the price confirms your area wave forecast. And we will be analyzing the Nasdaq 100 index. Traders have been asking me to analyze crude oil. I do not have data for crude oil. My apology to those traders. If you want to send me in the chat, the trader who did ask me that, I answered to that trader in the comment section, and I gave to that trader my email where he can contact me with a monthly chart, okay, daily chart, okay. At least if I can see the yearly chart, that will be even better. Then we can look at it and analyze okay, the chart, okay. If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up. I like that very much, okay? You think that, George, you have talked for 20 minutes and nothing inside this video, I dislike it, mark it down. I appreciate also training that I tell you that, George, you need to improve. I like that, okay? Mark it down if you think that is not good enough, okay? However, if you think that this is an essential tutorial that can help other traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. By sharing it, you are spreading the message. So those who are doing all kind of crazy things in the financial market may take note and start adjusting accordingly. All right. If you have not yet subscribed to our channel, please subscribe to our channel today. For Elliott Wave Trading, our channel is 24 Elliott Waves, digit 2, digit 4, Elliott Waves in plural. All right. Subscribe, stay put, and be sure to click on the notification bell. As they say, ring the bell and stay put. So when we are about to record a video, you'll be notified 2 hours before the live streaming of the pre-recorded tutorial, and 30 minutes before the live streaming will begin. Google YouTube will inform you again that George is getting ready to watch the video together with you. All right. So subscribe today. If you want to know what I'm doing, sometimes I post video first on YouTube, sometimes first on Facebook. Our Facebook page is stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about accurate area wave trader does not get carried away with his area wave forecast. Thank you for watching.